2 and 1-866-6775.
You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries. As we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media, this is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing planner, plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. World Spay Day. Okay. I guess I could say
it is what it is.
National Tile Day. No excitement there. Dog Biscuit Day. Those of you that are dog lovers out there, I do appreciate my dog. Not into taking her to every restaurant, every movie theater, every store I go to, but we have fun with her. She's our family pet. But having beaten anorexia, you can probably guess exactly what I'm going to be looking for today, because one of my favorites today is actually National Banana Bread Day. So I'll have to share that one out with, I would say I would tweet it out, but being that I no longer am on Twitter, I guess we won't be tweeting it out, but we will put it on our social channels. What's the markets doing today? Dow Jones now down 181. Been a rocky ride on the Dow today. The NASDAQ per barrel, you want to know? Yeah, Calizuela, we're at $3.59 a gallon average on gasoline. $2.65 is the national average. So we're still significant. About $1.30 a gallon more than some of the best places in the country. Of course, it's Calizuela, so we don't want to ever be leading anything that doesn't cost a lot of money. So what else is going on? Let's take a look. 10-year Treasury down ever so slightly. Not enough to talk about. I saw an interesting numbers this morning. And yes, I do get up quite early. And let's see, I checked some of the numbers, watched some of the markets. And one of the numbers that came back that we had here was I was listening to one of the analysts this morning. And he's not a fan of all of these different stimulus items. But even more than being not a fan of stimulus, he's a fan of thinking. So he posed this question. We're looking at another $1.9 trillion in stimulus. Ow! That translates into spending your money the way the government wants to, not the way you want to, right? Because they don't have any money. The government doesn't earn anything. All they do is take from you and give to wherever their pet projects are. Not the ones that you want, right? I mean, how many of us are really going to be going to the Kennedy Center this year, right? Maybe one person listening to us right now may go to the Kennedy Center, but millions of your dollars get transferred from you to the Kennedy Center. I digress. So the proposed stimulus bill is $1.9 trillion. There are approximately 330 million people in the United States of America. If every one of those people, now we know not every one of them qualify for that $1,400 stimulus check, but if everyone qualified for that $1,400 stimulus check, That would be $462 billion that the government gives to you and to me. $462 billion out of $1.9 trillion. That's $1.5 trillion left over. Where is that going? Now, let's take it one step further. What if the government gave every American person, 330 million people, again, we don't all qualify, $4,200? $4,200. What could you do with $4,200? But if the government decided to send that check to you, that would still be a little bit less than the $1.9 trillion they're spending. Where is the money going? There are all kinds of pet projects that are out there that they're going to be giving your money to. Let's see, transportation and infrastructure spending, $350 billion they're going to give to state and local governments. Funding for the Confucius Center, $50 million for EPA environmental justice grants. Listen to this one. The state of Rhode Island is $500 million in debt. $500 million in debt. Okay, I get it. So to set to take care of that $500 million in debt, the stimulus package is going to give them $1.5 billion, 3 times the amount. Can somebody help me with this? Can somebody help me understand why, if you're going to try and help them get out of debt, we're going to give them triple the amount of their debt? Does anybody understand that? It's your money. Are you asking your state, your local congressperson, why are they giving away your money? Because they say that they're going to tax the rich, but we know all too well the rich have boatloads of money, so they're not going to pay it. It's going to trickle down to maybe a new gasoline tax that you and I are paying. Maybe it's some sort of a tariff that they're going to put on that you and I will pay. Maybe they're going to put on some other taxes for us. They've already told us that they're planning on taxing more. If you're a senior citizen, they want a capital gains tax. Guess what your IRA is? Capital gains. If you have any money invested in the stock market, capital gains. If you're getting dividends, they want to tax that too. Think about that. So where's the money going to? Yeah, they're gonna give it away to some of these endowments. They're going to give it away to a state like Rhode Island that they're going to give triple the amount of their debt, and they're going to tell you and me that it's for the betterment of the country. No, it's not. It's for a politician that wants to get reelected. That's all it is. Now, right now, as we speak, the chairman of the Federal Reserve is speaking to Congress. He does that on a regular basis. Now, he's talking about the economy and how the economy is growing, but he's going to continue letting more and more money go through the economy. Why is he doing that? They're not going to tell you this either, right? His term ends in about a year. Do you think that he wants to get Janet Yellen, Treasury Secretary, upset with him? Do you think, well, Joe Biden doesn't probably know who he is, but do you think he's going to upset the administration at all? No. So his idea is continue spending, continue buying bonds. The more he can buy, the better he thinks it'll be. He comes out and says he reiterated his stance from January meeting that rates will stay at their current levels until the labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2%, is on track to moderately exceed 2% for some time. Now remember, at the beginning of the month, first Friday of the month, we get the jobs report, and we got a unemployment number of 6.3%. That was a fake number. Jerome Powell came out and said, nah, it's closer to 9.9%. We told you 9.9 a few days before the report even came out, because we're watching the first-time jobless numbers. We can figure those things out. 9.9%. So do you think he's going to let up on the easy money for anytime soon? Not in our lifetime. And you get some people that are supposed to be really, really smart, right? So we've got Merrick Garland. Yes, he's the one that sent President Obama nominated for the Supreme Court, never got voted on, never went through the process. But now President Biden has nominated him for Attorney General. Okay, I get it. But here's the issue that I don't understand. Senator Josh Hawley asked Garland whether he believes that illegally crossing the border should remain a crime. The response from the proposed Attorney General of the United States: I haven't thought about that question. Does anybody believe that? Right? You've thought about it. You're not even the nominee for Attorney General. You're not even been a nominee for Supreme Court, and you haven't thought about it. I don't know how you can just get away with saying some of these things. Senator Lindsey Graham pushed Garland to say whether or not Durham's investigation is legitimate. So what does the nominee say? I don't know really anything about the investigation. If you've been listening to Ron Siegel Radio, you know about the investigation. They've been investigating the hoax and how many people lied to the commission on the Russia hoax. But Merrick Garland, proposed candidate or nominee for it to be the Attorney General of the United States, knows nothing about it. Do you think maybe, don't say that he's been on that sauce. Unbelievable. John Kennedy, senator from Louisiana, asked Garland if he agrees with the statement that allowing biological males to compete in an all-female sport deprives women of the opportunity to participate fully and fairly in sports and is fundamentally unfair to female athletes. Garland's response: this is a very difficult societal question that you're asking me here. I know what underlies it. But he's going to be the Attorney General. You don't think that he should have an opinion on some of these things? You don't think that we should have the right to know what his thoughts are? Moving right along. Interior Secretary Haaland, or the pick for Interior Secretary Haaland, yeah, she's had some problems also in the news. Yeah, her Twitter feed, she deleted, from what I understand, about 1,000 tweets. But she's telling people that Republicans don't believe in science. Interesting. Well, Senator John Barrasso, Wyoming Republican, noted that he and two other GOP members of the Senate Energy and Natural Resources Committee are medical doctors. October 7th, the nominee tweets, Republicans don't believe in science. So the doctors don't believe in science? Is that what the nominee is saying? I can't make this stuff up. I just share it with you, and you just got to wonder, don't you, where they're coming from? Well, we're going to get on with it today. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, the reason mortgage rates are projected to increase and what it means for you. We've got a featured home brought to you by myfavoritelender.net. All that and more. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few. Good to see you, Alex.
Real Estate Radio is hosted by local real estate and finance expert Ron Siegel. The purpose of this show is to help consumers understand what's really going on in our local real estate market. We're teaching you the why and the how-to, so you'll always be one step ahead of everyone else. Whether you need to sell your home for top dollar, refinance and save money, or even buy a bargain in Southern California, Ron Siegel can help. Call Ron directly at 1-800-306-1990. That's 1-800-306-1990. Take advantage of speaking with Ron anytime you're entering a real estate transaction. Having someone who can answer all of your questions that truly cares about you and your family's best interest is priceless. Call Ron Siegel today and you'll be glad you did. 1-800-306-1990. That's 1-800-306-1990. Or you can visit realestateradio.com for more info.
Bluewater Credit Repair is the industry leader in fixing bad credit. Did you know a 40-point increase in your credit score can save you $40,000 on a home loan and $4,000 on a car loan? You deserve good credit and peace of mind. Take the first step today and go to bluewatercredit.com and register for a free consultation from one of their credit repair experts. That's bluewatercredit.com.
Trimming of your retirement does not include losing your house. However, due to today's lower stock market, higher medical bills, and taxes, many retirees face this very problem. This is why it is necessary that you, as a baby boomer considering retirement within the next 10 years, understand reverse mortgages and what one could do for you or your parents. A reverse mortgage could make it possible for you or your parents to travel, buy a second home, or start a new business. For more information about reverse mortgages, just call our off-air number at 1-800-306-1990. That's 1-800-306-1990, or visit realestateradio.com and click the free workshop button.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed rate below 3.5% APR? This means with $10,500, you can purchase a $300,000 home and have a principal and interest payment of about $1,300 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Rates subject to change without notice. Licensed to NMLS ID 217037. Equal housing lender. Not endorsed or sponsored by any government agency.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. 1990, the Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, hey, maybe you need a little help with the down payment to buy a home, or you've got debts and you want to consolidate them to save money. Geneva Financial, they've got the programs. You just need to make the call. So let's take a look and see what is going on in the markets today, as we do every day about this time. So we're looking at it right now. We've got the Dow Jones Industrial Average down 171 points. NASDAQ down 292 points. S&P 500 down 34. The 10-year Treasury down 2 basis points. Mortgage-backed securities are down 6 basis points, which means interest rates just a little bit higher today than they had been. We've seen some volatility in the interest rate market today, or in the bond market today. I should say interest rate market, but the bond market today. But why is it? Well, Fed Chair Jerome Powell testifying in front of the Senate Banking Committee. So we're going to be watching that, see what happens from his commentary. Sometimes we get some movement from that. Case-Shiller Home Price Index, considered the gold standard for appreciation, showed the biggest gain in 7 years. Nationally, there was a 10.4% annual gain December. That's the December reading, up from an already very strong reading of 9.5% in November. 20-city index rose from 9.2% to 10.1% year over year. All the cities showing strong gains. Phoenix, Seattle, San Diego, the highest annual gains among the 20 cities. Phoenix prices rose 14.4%, followed by Seattle, 13.6%, and San Diego, you're at 13% increase. Some nice numbers right there. The FHFA, Federal Housing Finance Agency, they released their house price index, measures home price appreciation on single-family homes with conforming loans. I like this one the best. While you could have $1 million home with a conforming loan amount, the report most likely is representing lower price homes where supply is tightest, demand is strongest. It should be no surprise that it is even stronger than the Case-Shiller report. Home prices rose 11% in December and are up 11.4% year over year, which is even much higher than the 11% in the previous report. Housing market on fire. Pacific, we have that broken down also to the Pacific region as well as having it just by national numbers, right? Because national is good, but we're not national. We're in SoCal, right? So up 1.1% month over month, 12.5% year over year. Mortgage bonds, they're trying to hold on. So we'll see what happens with that. We've been watching all of that right along. So we are continuing to watch that as we move forward. I thought I'd share with you this morning as well. I'm sorry, I should tell you that is the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next loan, Geneva's got the programs. Hey, My Home Mortgage, text My Home Mortgage, no spaces, to 79564. My Home Mortgage, 79564. Get that some great information right there from our friends at Geneva Financial. So one of the things as we go into this time of year, people are starting to look at their finances. And it's tax time. It's unfortunately, don't shoot the messenger. I'm just telling you that's where we are right now. We are at tax time. So one of the things we want to look at then is, how's your financial advisor doing for you? And I know several really good financial advisors. But here's some of the tools that you may want to consider when you're looking to hire or bring on a financial advisor. And again, it's just my opinion, what I look at. I want to share it with you. If you want the names of some people that I like, hey, you may not like them. But it is a major life decision that can determine your financial trajectory for years to come. 2020 Northwestern Mutual Study found that 71% of U.S. adults admit their financial planning needs improvement. However, only 29% of Americans work with a financial advisor. Let's do that math there. 71% need financial help. 29% work with a financial advisor. What are the other 3/4 of you doing? The value of working with a financial advisor varies by person, and advisors are legally prohibited from promising returns, but research suggests working with a financial advisor feels more at ease about their finances and could end up with about 15% more money to spend in retirement. I always drives me crazy, I guess is the way to put it. So all these financial firms, they're out there trying to share with you how they can help you, but there is no guarantees. We know that. But they can't even tell you that what their goal is. Right there, the FINRA and the regulatory agencies say, you can't promise anything. Well, I can promise to work hard for you, can't I? And I'm not a financial advisor. I used to have to follow all these rules. Now I can be honest. Right? So I tell you straight out, there's some of the index universal life policies out there, or products out there, that get about an 8% annual return over a long period of time historically. Can't guarantee that'll be coming in the future. You got to throw that in there. And I'm not a financial advisor, so I'm not telling you what to do, what not to do. Just telling you about history. Does history repeat itself? Maybe. If it's happened before, though, it does tell you that it could happen again. I like certain of the index universal life programs because they have a floor. So right now, while the markets are great, they are going to limit how much you can make. I think it's 13 or 14%. Isn't that a shame? But the benefit is if the markets go down, and they always do, they're a cycle, right? They've never gone down from, I think the stat is over the last 60 years, there's never been a rolling 10 years where the market's been down. Maybe once. I think it's never. It might have been once. So you can historically say that the likelihood is it's going to go up again. That's what we like to look at. We look at history. What does history tell us? So that's where we can get some better information. So the advisors do good. All advisors have been vetted and verified through rigorous screening processes if you go through certain institutions to look at them for you. 7 items that we look at for deciding on or we suggest when you're considering a financial advisor. First off, are they a fiduciary? By definition, a fiduciary is an individual who is ethically bound to act in another person's best interest. This obligation eliminates conflict of interest concerns and makes an advisor's advice more trustworthy. All financial advisors that are on some of the better lists are fiduciaries. Don't be a lazy shopper. When it's tempting to hire the advisor closest to home or the first advisor in the yellow pages, may not be the best idea. Don't just say, well, my brother's first cousin's wife's dog recommended this one. No, that's not the way you pick the advisor. I would share with you, we talk on a broadcast, Stephen Stakely does a great job, Chris Bissonnette, Todd Halterman, all do great jobs for the listeners of Ron Siegel Radio. Don't choose an advisor with the wrong specialty. Did you know there's a specialty within advisors? Some advisors do nothing but insurance products. Some advisors are dealing with options. Some are dealing with higher risk strategies. Some are dealing with no risk strategy, or no risk would be basically treasuries, right? Some are bond strategists. Some are stock strategists. Some are traders. Well, find the one that fits you the best. Do not pick an advisor with an incompatible strategy and say, he can do this part for me. No. Ask them their credentials. Ask them how they get paid. Right? Are they Series 7 licensed? Series 66, 65? Do they have a certified financial planning degree? Right? Or accreditation. It's not a degree, but it's an accreditation. Again, ask them how they get paid. Check all these things. Ask your tax planner. They probably know one or two. A lot of ways of doing this, but do it. A good one will help you with the parts of your financial portfolio that is optional, your choice. But they'll also look over what you have in real estate. They'll look over what you have in qualified funds that maybe you don't have as much access to. Those are what you want to get from a financial advisor. If they're going to be working for you, you want to make sure they know what they're doing. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, mortgage rates are projected to increase, what it means for you, how to make sure you're credit ready to buy a home. We're going to finish that conversation from yesterday. And of course, we've got that featured home brought to you by myfavoritelender.net. All that and more. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us. Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Hi, we're here with Ron Siegel, the host of Real Estate Radio. Ron, welcome to the studio. Give us insight as to what your show is all about.
Hi, Eric. Thanks for having me. Thanks for asking me that question. The reason we developed Real Estate Radio is right now there's an abundance of misinformation out there. So Real Estate Radio is a show designed to give Southern California a focal point for their real estate knowledge, as well as a place to go just in case they might need anything real estate related.
So how are you helping people?
That's actually pretty simple. People need advice. So it really doesn't matter who you are. If you have any real estate questions, we're here to help. Whether you're buying a home, selling, you're experiencing a loan modification, short sale, foreclosure, there are a lot of things going on in this marketplace.
How can people get a hold of you?
Real easy. All you have to do is call. The number is 1-800-306-1990. Press option 1.
Interesting times in the market right now. Where do you think the markets are going from here?
That's a great question. All I can say is this. The housing market came down one house at a time, and what we're going to have to do is we're going to have to build it one house, one family at a time. So the best thing that anyone can do is access the free advice that we really want to give you. And to do that, you simply need to call me. The number is 1-800-306-1990, option 1. I'd really love to help.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you paying rent because you think you cannot afford to live in your dream home? Are you renting because you don't believe that you have the down payment funds to purchase your own home? The Siegel lending team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel lending team today at ronismylender.com. Again, ronismylender.com, license under NMLS 217037. ronismylender.com.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed rate below 3.5% APR? This means with $10,500, you can purchase a $300,000 home and have a principal and interest payment of about $1,300 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel lending team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL lendingteam.com. Rates subject to change without notice. Licensed to NMLS ID 217037. Equal housing lender. Not endorsed or sponsored by any government agency.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Well, welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text SLT Home Digest to 79564. Find your dream home before someone else does. SLT Home Digest to 79564. Find that dream home. It tells you what the county recorder knows about your property. It'll tell you what the market believes about your property. And it's free. The reason mortgage rates are projected to increase and what it means for you. We're currently experiencing historically low mortgage rates over the last 50 years. The average on a Freddie Mac 30-year fixed rate mortgage, it's been 7.76%. Today, that rate is 2.81%. That's a Freddie Mac number. Flocks of home buyers have been taking advantage of these remarkably low rates over the last 12 months. However, there's no guarantee rates will remain this low much longer. Whenever we try to forecast mortgage rates, we should consider the advice of Mark Fleming, chief economist at First American, and I quote, "You know, the fallacy of economic forecasting is don't ever try and forecast interest rates and or more specifically, if you're a real estate economist, mortgage rates, because you will always invariably be wrong," unquote. So what does he mean by that? What is he talking about there? Because he's an economist, right? So wouldn't you expect that he would know what he's talking about? Many things impact mortgage rates. The economy, inflation, and Fed policy, just to name a few. That makes forecasting rates difficult. However, there's one metric that has held up over the last 50 years, the relationship between mortgage rates and the 10-year Treasury. And if you are watching us on RonSiegelRadio.tv, any of our social channels, or the AM 1490 ABC News and Talk video, you're seeing a chart right now that shows interest rates. The relation actually details the relationship since Freddie Mac started keeping mortgage rates in 1972, and that's the relationship between mortgage rates and the 10-year Treasury rate. Now, we're showing big numbers in a real short period of time. There's going to be some fluctuations, but when you're looking at some of the big picture, going from 72 all the way to 2020, they pretty much follow each other. No denying the close relationship between the two. Over the last 5 decades, there's been an average of 1.7 spread between the two rates. It's this long-term relationship that has some forecasting projecting an increase in mortgage rates as we move throughout the year. This is based on the recent surge in the 10-year Treasury, and that's been going up quite a bit lately, so we're watching that one for you as well. If you notice, every morning on Ron Siegel Radio, as I begin the broadcast, I am telling you what's going on in the mortgage world. Why do I tell you what's going on in the 10-year Treasury world? Why do I share that with you? I know. I lead a lending team. You're going to tell me that, hey, Ron, it's in your best interest to share that with me. Yeah, well, that's true. No denying I do lead a lending team, and we do have some great information on these rates that I would like to share with you all the time. But it's all part of the education process. If we don't share the numbers with you, and if we don't give you an education, like I've shared with folks, that do I always know when the rates are going to change? When are they going to be beneficial? When it's going to be right for you? No, there's nobody that knows that all the time. Anybody that says they can time the market, run, don't walk, because they are not being truthful with you. But what I will tell you is we look at history. We look at what the 10-year Treasury has been doing. And if you look at what's gone on in the last, 4 months, there's been a trend. So we watch the trends. We say, okay, what are the trends telling us? What do I need to know to share this with you, to give you an indication of where these markets are going? So we look at it and we say, okay, the 10-year Treasury rate, if we look at that, and let me see if I can get that on the screen for you. Yeah, there we go. So you can look at that 10-year Treasury rate, and since the October, it was at 0.68. It's almost doubled in that time. So spread between the two is now 153, indicating mortgage rates could rise. Actually, a bump up in rate has already begun. As Joel Kahn, Associate VP of Economics Forecasting for the Mortgage Bankers Association, reveals, quote, expectations of faster economic growth and inflation continue to push Treasury yields and mortgage rates higher. Since hitting a survey low in December, the 30-year fixed rate has slowly risen and last week climbed to its highest level since November 2020. So, how might they go in 2021? No one knows for sure. Sam Cotter, chief economist of Freddie Mac, recently suggested, while there are multiple temporary factors driving up rates, the underlying economic fundamentals point to rates remaining in the low 3% range for the year, unquote. What does this mean for you? Well, if you're a first-time buyer or you've purchased a home before, even an increase of half a point in percentage rate, 2.81 to 3.31, makes a big difference. On a $300,000 mortgage, that difference, including principal and interest, $82 a month, $984 a year, $29,529 over the life of that home loan, assuming a 30-year loan. So based on the 50-year symbiotic relationship between Treasury rates and mortgage rates, looks like those rates are going to go higher. And I'll share with you a simple thought about that as well. One issue is that we know that they're not going to go too much higher. Why? I told you, I gave you that hint before the broadcast started, or in the first segment of the broadcast. Jerome, what does everybody in Washington want? No, they don't care about you. They don't care about me. What they want in Washington is to keep their job. That's Washington. So, if you do well and I do well, that's a bonus. They want to make sure they do well, right? If you look at what the net worth is of politicians when they enter office versus when they leave office, staggering how much money they make in office when they make, $150,000 to $200,000 a year, maybe a little more for the top levels, right? So they come out with boatloads of money. Why? Well, they're doing things that benefit them. So if they can do that well while they're in office, because they come out multimillionaires, gazillionaires, right? So that they're not doing it for you. If the interest rates go up, that's going to slow down the real estate market. If the real estate market slows down, that slows down the economy. If the economy slows down, in most instances, you're going to look and say, I want to replace these people. In Venezuela, we don't. We just stay there forever. Because the problem is, in most cases, it's your congressperson, it's your senator that's bad, not mine. So I can't understand why you keep voting for yours. I'm going to keep voting for mine. Right? That's the way these things work out. So the bottom line here is they want to keep their jobs. If they want to keep their jobs, what do? They continue doing what they've done. They're going to give you the more stimulus money. They're going to do all these things that don't make sense, but they continue doing them anyway because that's how people like to get money. They like free money. So even though they don't think about who's going to pay for it and how they're going to get taxed to take more of it back from you, they continue to do it. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, yep, we've got it. That featured home brought to you by myfavouritelender.net and more. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. No longer on Twitter at Ron Siegel, but if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call Ron Siegel at 1-800-306-1990. That's 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation mortgage adoption plan. You be the judge if it's right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to map@ronsiegelradio.com or call today, Ron Siegel, 1-800-306-1990. That's 1-800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporation and MLS 217037 and BCAL-BRE number 018694452.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Do you believe Southern California real estate is a great investment? Are you a little short to be a cash investor? Are you missing the Social Security card or tax returns? The Siegel Lending Team has the loans for you. Common Sense Lending is back. Yes, there's a cost to higher risk, but the reward can be great. Call today for details. 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations and MLS 217037 and DRE number 1869452.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed rate below 3.5% APR? This means with $10,500, you can purchase a $300,000 home and have a principal and interest payment of about $1,300 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Rates subject to change without notice. Licensed to NMLS ID 217037. Equal housing lender. Not endorsed or sponsored by any government agency.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The featured home segment today being brought to you by myfavoritelender.net. And we've got a featured home. We try to get one each day for you. Who's got today's property? It's Patty Gregory. Yeah, 1934 West Broadway. I grew up right over there, 92804 area. 3 bedrooms, 2 full bathrooms. Welcome home. It's in the heart of Anaheim, close to schools, shopping, the stadium, Disneyland. Maybe they'll open eventually. Enjoy a large open concept living space with a cozy fireplace, gorgeous beam ceilings, 3 bedrooms and 2 bathrooms. The master bedroom boasts an ensuite bath and jet tub. The pool built-in barbecue. And room to park your RV. Adorable home, has it all. It's going to go quickly. Price, $679,000. Let's take a look at some financing options. 3.5% down. You're looking at $2,634 tap principal and interest. 20% down, $2,290 principal and interest. 25% down strategically. $2,012 principal and interest. Yes, you have to add the taxes, the insurance, if there is mortgage insurance. For those of you keeping score, we're looking at a 3.6 APR, 3.05 APR, and a 2.715 APR, NMLS 217037. Keep those compliance people happy. That is the featured home brought to you by myfavoritelender.net. If you want more information about this or any properties, give me a call at 800-306-1990. I would be happy to put you in touch with Patty Gregory. She is the agent for that one, and her team does a great job over there. Patty Gregory is the one. Reasons we're definitely not in a housing bubble. I get this question all the time. In fact, I just had it yesterday again. Are prices going to drop? Are we going to see another 2008? No. Simple answer. Home values appreciated by 10% in 2020. And they're forecasted to appreciate by about 5% this year. This has some voicing concern that we may be in another housing bubble like the one we experienced a little over a decade ago. Here are 3 reasons why this market is totally different. 1, this time housing supply is extremely limited. The price of any market item is determined by supply and demand. If supply is high and demand is low, prices normally decrease. If supply is low and demand is high, prices increase. In real estate, supply and demand are measured in months' supply of inventory, which is based on the number of current homes for sale compared to the number of buyers in the market. The normal month supply of inventory for the market is about 6 months. Anything above that defines a buyer's market, indicating prices will soften. Anything below that defines a seller's market, in which prices normally appreciate. Between 2006 and 2008, the month supply of inventory increased from just over 5 months to 11 months. The month supply was over 7 months in 27 of those 36 months, yet home values continued to rise. Months inventory has been under 5 months for the last 3 years, under 4 months for 13 of the last 14 months, under 3 for the last 6 months, and currently stands at 1.9 months. It's a historic low. Remember, if supply is low, demand is high, prices naturally increase. Number 2, this time housing demand is real. During the housing boom in the mid-2000s, there was what Robert Schiller, a fellow at the Yale School of Management's International Center for Finance, called Irrational Exuberance. I think that started off with Alan Greenspan way back when during the dot-com years. The definition of the term is, quote, unfounded market optimism that lacks a real foundation of fundamental valuation, but instead rests on psychological factors, unquote. Without considering historic market trends, people got caught up in the frenzy and bought houses based on an unrealistic belief that housing values would continue to escalate. The mortgage industry fed into this craziness by making mortgage money available to just about anyone, as shown in the Mortgage Credit Availability Index published by the Mortgage Bankers Association. The higher the index, the easier it is to get a mortgage. The lower the index, the more difficult it is to obtain one. Prior to the housing boom, the index stood at just below 400. In 2006, the index hit an all-time high of 868. Again, we had that two-step mortgage process back then. Number one, can you fog a mirror? If you said yes to that, you got the mortgage. If you said no, maybe you can get a mortgage. Basically, that's all it was. Today, the index stands at 122.5, well below even the pre-boom level. In the current real estate market, demand is real, not fabricated. Millennials, the largest generation in the country, have come of age to marry and have children, which are two major drivers for home ownership. The health crisis is also challenging every household to redefine the meaning of quote-unquote home and to reevaluate whether their current home meets that new definition. This desire to own, coupled with historically low mortgage rates, makes purchasing a home today a strong, sound financial decision. Therefore, today's demand is very real. Remember, if supply is low and demand is high, prices naturally increase. Number 3. This time, households have plenty of equity. Again, during the housing boom, it wasn't just purchasers who got caught up in the frenzy. Existing homeowners started using their homes like an ATM machine. Yeah, we've talked about that one before many, many times.
You know better than that.
There was a wave of cash-out refinances, which enabled homeowners to leverage the equity in their homes. From 2005 through 2007, Americans pulled out $824 billion in equity. That left many homeowners with little or no equity in their homes at a critical time. Again, prices began to drop. Some homeowners found themselves in a negative equity situation where the mortgage was higher than the value of their home. Many defaulted on their payments, which led to an avalanche of foreclosures. Today, the banks and the American people have shown they learned a valuable lesson from the housing crisis with little over a decade ago. Cash-out refinance volume over the last 3 years was less than a third of what it was compared to the 3 years leading up to the crash. Conservative approach has created levels of equity never seen before. According to the Census Bureau data, over 38% of owner-occupied housing units are owned free and clear. That means there's no mortgage. Also, Atom Data Solutions just released their fourth quarter 2020 U.S. home equity report, and that revealed 17.8 million residential properties in the United States were considered equity rich, meaning that combined estimated amounts of loans secured by those properties was 50% or less of their estimated market value. The count of equity-rich properties in fourth quarter of 2020 represented 30.2%, or about 1 in 3 of the 59 million mortgaged homes in the United States, unquote. If we combine the 38% of the homes that are owned free and clear with the 18.7% of all homes that have at least 50% equity, 30.2% of the remaining 62% with a mortgage, we realize that 56.7% of all homes in this country have a minimum of 50% equity. Way better than 2008. The bottom line here, this time housing is at a historic low. Demand is real, rightly motivated. We've talked to you before about the idea that a lot of our millennials turning 33, guess what the number one age for buying a home is? They tell me it's 33. So if that's the case, that's more demand. Millennials becoming 33. Guess what happens next year? Even more millennials become 33. That means we continue to build up on the demand side, and we're not getting a lot of supply. So I'm going to share with you, if you're thinking about buying, if you're one of that 56.7% of all homeowners in the country that have a minimum of 50% equity, that equity is doing absolutely nothing for you. The rate of return, we've talked about this on Ron Siegel Radio many, many times. Rate of return on home equity is zero. Zero. I'm going to recommend it. I know that some of the financial advisors and regulators don't like it. Take that money out and put it into a safe, secure investment that's going to get you historically better rates than the interest rates are today. Think about that. If you don't know them, give me a call, 800-306-1990. I would be happy to introduce you to some people who can help you, guide you on a road to potentially, they can't promise it, but potentially get you that better interest rate of return. And as always, I ask you, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.